In this presentation, we will continue on with our bank reconciliation for the first month of operations, or the first month that we have entered data into our system within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. We're going to continue on with the bank reconciliation. If you missed the prior presentation to get the introduction to it, you can go back to that. We're going to go to the reconciliation process and go down to the actual data input at this time, or the reconciliation detail. We're going to do that by going to the accounting on the left side. We want to be up top in the reconciliation tab. I'm already in the reconciliation tab. I am now reconciling. So we had started the reconciliation last time. Here's the reconciliation page. We want to be on the checking account. We had the beginning balance of that $25,000. We know the ending balance. I'm going to re-enter the ending balance, which is $109,415. That then being the date of 01/31/19. This is where we left off last time. This information coming directly from the bank statement. Here is our mock bank statement. Like most bank statements, it's going to be as of the cutoff date, as of the end of the month in our case, beginning balance to $25,000. That has to match. If it doesn't, then we're going to have to enter that into the system in one way or another. And then we have the additions, the subtractions, the ending balance. So this is the ending balance we just entered into the system. In essence, what we're going to do now is just say, hey, we got the beginning balance, we've got the ending balance. We're just going to check off the detail for each of the additions and subtractions. Seems like a tedious job, but this actually is well worth doing, and that's what we'll do here. We're just going to go through now and check off everything. We know that if we find everything, then it has to be in balance. In other words, we have to find everything on this bank statement, all this detail, on our books. If it's on the bank statement, it must be on our books, unless the bank statement is wrong, which isn't typically the case. I mean, if it came out of the bank, then it's probably something that we're going to have to accept as having been paid that's going to come out of the bank. Now, if it's a charge that shouldn't have happened and we go back to the vendor and they're going to fix it, well, then that's great. We're still going to take it out of the bank right now and hope that once it is fixed, then it'll affect a future bank statement. That's fine. If there's something in the bank statement that's just wrong, that somehow the bank got wrong, that's unusual. But that could be the case. Again, what will typically happen is the bank will then adjust it in a future bank statement, which means, again, most of the time, if it's on the bank statement, we're going to have to accept that, put it in our books, deal with it, hopefully fix it in the future, and then reconcile, and then have that entry later in the future. So bottom line, if it's on the bank statement, typically we're just going to have to enter it into our books. Bottom line is, if it's on the bank statements, it already should be in our books, and we just check it off. If it's in our books, if it's on our books in QuickBooks, but not on the bank statement, it's very likely that that's okay, because that's going to be a timing difference. So therefore, what we want to do then is, as we look at this information, we always want to tie from the bank statement to our books. So it seems like a small thing, but it saves a lot of time, actually. So we'll detail that more as we go. Here's our information. We're going to then say start the reconciliation process. Here's going to be the reconciliation screen. Within the data input, we have the 109,418, and then we have the 25,000. If we subtract those two out, the difference between them is what we're going to check off. That's what we're going to check in the detail down here. That difference, of course, is the 84,415. So in other words, we're going to check off that difference between the beginning balance and the ending balance, the 109,415, the 109,415 minus the 25,000. We're going to go ahead and find all those, that being these two numbers, or the detail. We're going to check all those off. Once we do that, this difference will go down to 0. We'll do that by checking off the activity down below. The activity, these are the transactions that should match the bank statement because they cleared the bank. These are our cash transactions. Note that they're all being viewed right now, so they're all being viewed. We could view just one at a time, which is what we'll do. In other words, if we want to just see the payments first, these are all the payments that are going out. And then if we just want to see the checks, these are the checks. So we can say these are all the checks. Or if we want to see all items, we can see all items. We can also change the sorting. So if we're on the payments, for example, and it sorts by date, we can sort by date or reference number or some other area. Most bank statements will sort by date or reference number. And so it's useful then to be able to sort in the same format by date or reference. That makes the reconciliation much easier to do. So what we'll do is we'll start off with the deposits. So we're going to go to, there's fewer of them typically. So let's go to the deposits, and we're just going to tick and tie them off with the deposits on our bank statement. So in essence, if we go to the bank statement, one deposit is the 25. That's part of our formula. We've already found that. I'm going to highlight it as I would in practice. If it was on a piece of paper, I would take the highlighter and highlight it. We'll just highlight them as we go. We found that one. Then we're going to go to the deposits. The deposits are over here. Now note what we have to check off the deposits. We have the amount and we have the date. That's all we have, but the date may not be exact. This date, in other words, will probably be before the deposit date in the bank statement because it takes a little while for the bank to know about it. So they're not going to deposit it right at the same time, but it will be close. Also note that this amount that we have on the bank statement is going to be batched in whatever way we enter information into the bank statement. In other words, if we had multiple checks, multiple cash, we went to the bank and we deposited it at one time, but we entered it into our QuickBooks file as we got the cash, then it should still all match out. The deposits should all match out. However, they're not going to be grouped in the same way. And that's what we've been talking about with the undeposited funds. You want to make sure to group the deposits as close to possibly can to how they will be seen on the bank statement to make this reconciliation process as easy as possible. The concept of the undeposited funds and using it properly is to do that. That's supposed to help us, that will help us to match this out. If that's matched out, great. If you have multiple deposits that add up to that 50,000, you can figure that out. But going forward, and you can check off multiple deposits to match out to the 50, but going forward, you really want to fix that so that you don't have to do that because it'll save you a lot of time. So we're going to say the 50,000, that's the one we're looking for. There it is. We're just going to check it off. And notice that that changes the difference up here. So we want this to go down to 0 at the end of the day. It might go up or down as we check things off because that's just the way it is. It has to be exactly 0 to really make the reconciliation effective, and it has to work because we're just going to find all of these numbers that are on the bank statement on the account, so it has to tie out. So we're going to say, all right, that we found that one. Here's the 65,000. So here's the 65,000. Whoop. I'm going to check it off with this little circle. So we're going to highlight that and highlight that as green. The next item is 628 as the deposit. If we scroll back over, I'm going to say, I don't see a 628. I've got an 8,420, a 12,708, and a 955.50. And so this is one of those problems. We're going to say, well, it doesn't tie out. Why isn't that the case? And that's going to be it might be a grouping issue. And that's what I would assume first. We would say, well, maybe that's going to be some kind of grouping problem. Maybe I grouped these two together and somehow put them into the QuickBooks system in a different grouping as was put into the bank statement. So if that's the case, maybe these two should tie together. What does this add up to? And this is the kind of thing we would have to do if the deposits aren't grouped in the proper format. I'd have to say, all right, well, this adds up to maybe 628 plus 20,500. That's 21,128. Well, does that add up to my deposits here? Anything here? Well, we have maybe these two. We've got the 8420 and the 12708, and that's that 21,128. So it looks like that is indeed the case. That's going to be the issue. So in other words, if I check these two off, we should tie out to the deposits. The deposits should be good, and we are okay. That's not too bad to do if we only have a few deposits. But note if we have a whole lot of deposits and we're trying to kind of do that for a whole lot of different deposits, that will be a problem. What we want to do is try our best to group the deposits in our QuickBooks system in such a way that they will also be grouped within the bank statement. And that's a challenge for sometimes some people, some companies. particularly if we're dealing with something like credit card deposits or deposits that are being directly made from an outside source. Then we want to work with that source and the bank and see how we can match this information up so that we can make the reconciliation process as easy as possible. You may have to talk to the credit card company, talk to whoever's making the deposits, and to the bank to work out the best grouping system so that you can make the reconciliation process as easy as possible. Now we're going to do the same thing for the payments. I'm going to select the payments and we'll scroll through the payments and we'll do the same thing, just ticking and tying these off. We're now on this side. We found a home for these two, so that is good. Now we have the check number. Now if we don't have a check, then of course we won't have the check number. We'll have the same kind of information we had with the deposit, just the amount and the date. And the date isn't even that reliable with the checks because the checks may take a while to clear. Some people will deposit those checks right away and they'll clear within like 1 to 3 days. Probably take around 3 days anyways, just to if they deposit it right away. But they may take longer than that, and it could be like a month later before the check clears. So the date is not that reliable. If we have a check though, the number is nice, so our number should help us. But the amount as well, of course, will help us to tie out. If the amount ties out, then we'll be okay. So that's what we're going to do here. We'll tie these out. Now, if you don't have the check and they're electronic transfers, we won't have the number to help us tie out, but we will typically have more references from the bank about what the check was for that can help us as well. Also note that you might want the canceled checks, whether they be electronic or not, to help verify and go through the check, the process. So let's go through these, and also note that we had the addition, so we basically found this number now. So we've tied that out by checking all these out. Now we're going to the checks. We're looking for check number 1001, 12,000. If we scroll back over here, here's the 12,000. So I'm going to check that off. The check number isn't there, so it's not entered in our system for whatever reason. We could then go into the detail, the check detail, if we want to double check that it's the right one, and check to see that we have the correct information, including the payee and whatnot, to verify that amount. So we're going to go back over and say we found that. So I'm going to highlight that. We want the 16,1002. So here's the 16,1002. So this is tedious, but notice it's pretty easy to do. And we're going to, even if it was a long account, 7,1003. Here's the 7,1003. So we'll check that off. 1004 for 400. Here's the 400, 1004. That looks good. We'll check that off. 1005, 598. So 1005, 598. That looks good. And then we're at 1005. Now it skips to 1008, 620. So we have to be careful there. We say, the next one was 1006. We're on 1008. That's okay, because that's the reason we're going from the bank statement to our books, because we expect not to find everything from our books to the bank statement. We do expect to find everything from the bank statement to our books, and if not, add it. So then we're going to go back and say, all right, we found that one, and now we've got the 15, 1010. So if we go back over here, we're looking for that 1010 for the 15,000. There it is. So we'll go back over and say we found that one. So we've got all those. Now the withholdings, we may not, or the withdrawals and the bank recs or the bank service charges, we may not have. So those we may not have, and we don't, we'll have to add them. So that's what we have so far. Now we also have all these items on the bank and our books that aren't on the bank statement. That's okay because they're going to be outstanding. These are outstanding, meaning they will clear the bank next time. When we do the February bank reconciliation, we will see these items that will clear. Now also note that it is possible for the first bank reconciliation, you might have had some outstanding items from December, in this case, from the prior month, that are clearing now in January. In other words, you wrote the check in December and now they're clearing in January. If that's the case, what you want to do if you run into that problem is go into the check register prior to the date we're working the information in, meaning 2018, we're entering in 2019, write those checks into the check register just as you would. So if you had a utility bill and a phone bill at the end of the month, just write it in there just like you would, decreasing the checking account and recording the other side to whatever income account it would be. It'll then roll into retained earnings and be correct as of the current time period. You'll then see it on this bank statement, and you can just check it off. It'll have the date of December 2018 in our case. You just check that off, and you'll be able to reconcile them out. In other words, if you had something on this bank statement that was as of January 1st, but you wrote it in December, then go ahead and write it in your system. Go back into your system. We got to fix it in QuickBooks in December, and then write it to the expense account. It'll roll into whatever the equity account will be, and you'll see it, and you'll be able to reconcile then in this area. We'll do a similar process for these items. These items are not in our system. They need to be, because they did come out of our checking account. We need to add them. So we're going to go back over. We're going to do that now. I'm going to do that with the register. So we're going to go to the accounting tab, and we're going to go to the chart of accounts up top. And I'll typically just go right into the register for the checking account. So we'll view the register. And then we're going to go to add a check. So we're going to add a check, and we may just want to make it an expense. We could just add an expense. It's not going to have a check number. So let's add it as an expense. As of 01/31/19, no reference number. We're going to say I'm going to have the payee. I'm not even going to have the payee a memo. I'm going to say this is a draw, money that we took out. So we're going to say it's a draw, $80. So there was a draw of $80 payment. Now we're assuming this is money that we just took out of the bank, possibly at an ATM. The problem with that, the problem with cash transactions, and what could be good things about cash transactions at sometimes, is that we don't know what we spent it on. We don't know what the $80 is for. We have nothing for it. If we didn't keep the receipt, we took the $80 out. Now, it could have been for personal use, or it could have been for business use, and we have to make the assumption of which it was for. If we think that we took the $80 out for personal use as a draw from the business account, we should put it into some kind of equity account like draws, not to an income statement, not to income or expenses. If we think it's a business expense, but we don't know exactly what we spent the $80 for, then we might want to put it into something like miscellaneous or other expenses that we will have. So it's going to be miscellaneous expenses that we have for business expenses. That's what we're going to assume here. We're going to put it into miscellaneous. I'm going to say miscellaneous expenses. The system has set that account up for us. QuickBooks has when we set up the chart of accounts. That's the one we will use. So I'm going to say save that one. And then the next thing we have here, so that will add this item to our books. Now we have this one on the bank statement, not on our books. That's money that the bank took from us, and we're not going to get it back. So we're just going to have to accept that and put it into our books and say, all right, there's a service charge. The bank charged us for stuff. And I'm not even going to put the payee. I'm just going to put a memo, bank fees, bank charges. It's going to be $15. And the account there is usually bank service fees, bank charges, and fees. This is an account given to us by QuickBooks. So we're going to put it in there, tracking it separately. So bank charges and fees, we'll save that. And then we can go back into our account and see what we have. Or in other words, we'll go back into the bank reconciliation in the accounting tab and see those two items should show up there. And then we'll go to the reconcile on the right. We're going to scroll back down and we're going to resume the reconciling. So we're going to resume the reconciling and then see if those items are there. They're going to be payments. So we can select the payments tab and then scroll down and we should have these two items. There's the 15, there's the 80. The 15 and the 80. And note what that does is it took, if I uncheck this one, $80 difference, now checking that off. Now we're down to 0. That means we're good. We're good to reconcile. Note that if I uncheck this, if this is anything other than 0, we're not good because it could go up or down no matter what we check off. If it's anything other than 0, we don't, even if it's off by like $1, we don't really know if that dollar difference is due to multiple deposits and multiple checks that are canceling each other out, or if it's due to just one of the amounts being off by $1. So it really needs to be basically 0. If it's anything other than 0, it really takes away the power of the bank's reconciliation to correct any errors. It should be easy to get it to 0, however, because all we have to do is basically go through here and just tick and tie everything off. If we know something doesn't balance, we should know exactly which of these items are not being found. And so it's really easy to do that, although it can be tedious if we have a lot of transactions. So I'm going to check this off, and there we have it. So now we have found everything. So we found all those. We basically found this. So we had the beginning balance. We checked off all the increases, all the decreases, therefore it must reconcile to the ending balance. That's why there's no difference here. We found everything on the bank statement in our books in QuickBooks. We did not find everything in QuickBooks that we entered in the cash account for January on the bank statement. That's what's going to be used to create the bank reconciliation. So this is not the bank reconciliation. This is the data input that helps us to generate the bank reconciliation. QuickBooks will now take this input and generate the bank reconciliation for us. We'll do that by going up top and say we want to finish this now. So we'll finish this now. It says success, you've reconciled your account. That's great. And now we're going to view the report. Here is the bank reconciliation report. We'll take a look at this in more detail in the following presentation. For more accounting information and accounting courses, visit our website at accountinginstruction.info.